Hello friends, this is Raj Sastry from Raj Option Trading. Today is August 17, 2021. I want to talk about top software stocks. Software stocks are doing great as you know, and we'll cover top software stocks and take it from there. So on the top of the list on a yearly performance basis, we got Riot Blockchain. It's a cryptocurrency play. Stock has done great, 893% in 1 year. And then you got GreenBox again into crypto, and $7 stock has done great, 721%. And then we got Grid BTBT. BTBT is again a crypto play. We got Mogo, Teradata, uh, Digital Turbine, and so on and so forth. So I have got here small and mid cap stocks in the first table here, and then I got large cap stocks in the second table. So from a large cap stock perspective, we got Lightspeed doing great at 215%, and then we got my favorite Cloudflare 210%, Fortinet again security and cybersecurity play 137%. Bill.com, it's into fintech, removing the back office issues. It's got a nice 134%. CrowdStrike, one of my favorite, again 133%. We'll talk about this and many more and see what are the few good software stocks to buy at this point. With that, let's jump in, get started. So here I've got top small cap software stocks. As you know, many of these small cap stocks are doing great from a performance perspective. We will look at those in a little more detail and take it from there. And the way I organized this, I got here the company, the price, market cap, and the sales. I also have insider transactions. Tells you if the insiders are buying their own stock or they're selling. If the insiders are selling, you got to watch out a little carefully. But on the other hand, if the insiders are buying, that's a great testament that insiders think their own stock is undervalued. For example, CleanSpark here, insiders are buying 32%, even institutions are buying 23%. That's a great sign here. The company is really, the insiders have confidence in the company. And then I got institution transaction that tells you if the big institutions are buying the stock. As an example, we got GreenBox here, institutions are buying, that's a good sign here. BTBT, institutions have bought 251%. And we got here Avaya and CleanSpark, same story, and a couple more as you can see here. Latch, Zeta, and so on and so forth. And then I got here sales and sales growth, very important. If you're a fundamental investor, pay attention to the sales and sales growth. Anytime you see positive sales growth in 1 year, quarter over quarter growth, coupled with a nice gross margin, that's a recipe for success. So the moment you see sales growth, gross margin, and if there is a good net margin, it's again a positive one, so then it's a good recipe for success. And then I got here debt to equity that tells you if the company has got too much debt on the balance sheet. Anytime you see higher debt to equity ratio more than say 1, then it's a red flag. Even more than 0.5 you got to watch out, but more than 1 clearly it's a red flag. You got to watch out a little carefully. And then we got RSI. RSI tells you the entry point. We don't want to buy the stocks which are completely overbought. So we want to buy stocks which are good value and they're at oversold at this time. RSI below 55, that tells you it's a good entry point. On the other hand, RSI above 55, that tells you, hey, wait, don't buy too much. If you want to buy a little bit, it's okay. For example, here, Green Sky, $7 stock, RSI 75, that tells you, hey, don't jump in right now. Even if you want to buy a small tracking position and take it from there. And then we got institution ownership that tells you if the big institutions are backing this company. And short float is very important, as you all know. If there is a higher short float or double digit, then there is a greater chance the stocks will create a short squeeze and go up on any good news. And then we got here price to sales, tells you if it's a little expensive from a valuation perspective. For example, here BTRS 100 plus, that tells you stock is expensive from a valuation perspective or a price to sales perspective. Then I got performance here from 1 day all the way to 1 year and 5 year. So I purposefully put 5 year here so that way some of these companies have got what it takes to perform during longer term. And then I also have how much stock has dropped from 52-week high. We normally don't want to chase when the stock is at 52-week high. For example, A10 already stock is at 52-week high. Instead, we want to buy a good value and a stock which is pulled back from its 52-week high a little bit. So with that, let's jump in and look at a few stocks and go from there. And what I've done is I've highlighted few stocks for you in a gray background. For example, Grid Dynamics. As you see here, nice sales growth. I like the sales growth. Quarter over quarter growth plus gross margin clearly beats rule of 40. It's much more than 40. And as you scan through here, RSI is 57. That tells you can buy cautiously here. It's little over, little over 55, but you can buy a little cautiously here. And as you scan through here, they've done nicely. They're pulling back a little bit on a weekly basis. They've done nicely. You could put a small tracking position here and take it from there. I also like GreenBox here. I have not highlighted. I also like GreenBox here. Right now, RSI is 31. Tells you stock is completely oversold. Not great from a net margin perspective. They got good gross margin, good sales growth. Stock has been selling off of late, as you can see here, all the way from 6 month, 3 month, all the way to 1 week. But on a 1 day basis, yesterday stock turned around and showed some signs of turning around. So I would probably buy a little bit of green box here with this uptick here and hold it for a while. And then we got here MOGO, same story here, $5 stock. Only on the negative side, this is a play where you got to be a contrarian. You're not a fundamental type investor because the 1 year growth is negative, and even quarter over quarter growth is negative. You're buying this because stock has dropped off a lot and showing some signs of improvement in the 1 week chart. That's the reason to buy this stock. Otherwise, if you're a fundamental type person, you would not buy this at these levels. But sometimes it's okay to buy these type of stocks when they show some strength in the near term chart. And then I got here Eventbri here, $16 stock. As you can see here, nice sales growth. I like that on a quarter over quarter basis. Nice gross margin, and RSI is 49. That tells you it's okay to buy some at these levels. It's clearly below 55. Stock is oversold. And as you scan through here, short ratio is high. This can cause any short squeeze on a good news. And stock has been dropping off in 1 day and 1 week, even 2 weeks for that matter, and 3 months. So I would buy a little bit of Eventbri at these levels and take it from there. And as you scan through here, I've got Zuora here. Zuora is into subscription software business, as you know, $15 stock here. And as you can see here, from a sales perspective and growth perspective, there is some growth, but not great. But they pass the rule of 40, quarter over quarter growth plus gross margin greater than 40. I would love to see Zuora even much higher. It's a software company. They should have a little more bigger gross margin, but that's okay. I'll take this anytime. Net margin is negative, as you can see here. And as you can see here, RSI 39. Stock is oversold at this time. As you see here, 1 day, 1 week, all the way to 1 month, even 6 months stock is off. So I would take this opportunity, buy some Zuora at these levels and take it from there. And then we got CleanSpark here. CleanSpark, on the other hand, it's got nice sales growth, as you can see here. Insiders buying, institutions buying, that's a great sign. And RSI is 45. That tells you right now stock is oversold. I would buy some clean spark at these levels. I think it's got fundamentals, it's got insiders and institutions buying, and as you scan through here, it also has got a high short ratio that tells you all the stars are aligned for clean spark to go higher. And then you got IMXI, $17 stock. As you see here, insiders are selling, institutions are selling a little bit, but nice sales growth as you can see here. And also RSI, for this is 67. That tells you, hey, wait and watch a little bit, don't buy too much. It's okay to have a small tracking position, but don't buy too much. And then you got a couple more here. Latch, as you can see here, it's a $9 stock. It's a recent IPO. Nice institutions, transactions here. Institutions are buying this stock here. And RSI is 30, completely oversold. Because it's a newer company, you don't see any sales numbers here. But as you scan through here, company are not done much. So if you're a counter trend type trader, looking for some advantage, you should buy stock like Latch, even though you don't see great fundamentals right now because it's an early stage company. Because institutions are buying and holding a nice position here, that's a good sign that this stock can turn around. And coupled with, if you see here one day there is some progress, stock is kind of telling you, hey, you know what, I'm ready for a turnaround at this time. I would buy some Latch at these points and hold it for a while. And as you scan through here, we got one more here, YEXT. YEXT RSI is 41. You could buy some YEXT at these levels. From a fundamental perspective, you got sales growth and a gross margin. It's okay to buy some at these levels. I think that's what I have here. And as you can look through here, look at the RSI levels as usual. If it is less than 55, many of these companies, as you can see, are less than 55. Only reason I did not highlight them is because I did not see a sales growth. But you should look at some of these companies, and it's okay to buy a little bit and watch and see how they do. And now let's go into next slide here. The next slide is all about mid-cap companies. Typically, if you want to be a little bit risk averse, stocks are always a good play. With the small cap stocks, it's a little more riskier. But mid-cap stocks, they have seen it. They can weather through some of these downturns. On the top of the list, we got Riot Blockchain, a cryptocurrency play, $35 stock, as you can see here. Nice sales growth. I love this sales growth as well as gross margin. Net margin is negative. RSI is 56. That tells you can cautiously buy at these levels also. And stock has done great. But, on a yearly basis, 893%. It's down 55% from 52-week high. The stocks like Riot Blockchain and other crypto stocks, my go-to strategy is really wait till the stock crashes. There'll be big news about crypto. Maybe government is cracking down. Chinese government is cracking down. There is some regulations. All these stocks come down to earth. At the time, buy and keep. That's the great mantra for stocks like Riot and all the crypto stocks. Then we got Teradata. Teradata was left for dead while ago. Stock did not do anything. It's got bigger competitors like Oracle, Snowflake, and whatnot in the big data area. But now stock is showing some sign of turnaround. I would not buy at these levels. RSI 68. I would wait and watch because it's got too much competition to think about. On the other hand, I got stocks like Appsier Digital Turbine. Great stock. I love Digital Turbine. But as you can see here, institutions are selling a little bit. Insiders are selling a little bit. Not too much. I'm not worried here. Nice sales growth. I love these sales growth numbers, and nice gross margin and net margin. Companies making money. That's why you see positive net margin. And as you see here, RSI 31 tells you stock is completely oversold. So that's a good one to buy in my mind. You might have a little bit higher time horizon, but I think this company will do well. As you scan through here, not too much short ratio. Don't expect a huge short squeeze. But if you see here, performance perspective, last 6 months, stock has been going down, as you can see here, but they've done nicely for 1 year and 5 year. I think Digital Turbine is a good one to buy at these levels. I'm sure stock will turn around. Good value at this time. Great fundamentals. Stock is completely oversold with RSI 31. Then we got NCR here, $42 stock. I think they got okay sales growth, as you can see here. They have not. They're not beating the rule of 40. It's a little shy of rule of 40. RSI is 49. Tells you stock is oversold. They got a little more debt on their balance sheet. Not great one, but because stock is getting weaker here, RSI is 49. They got good sales growth. You could buy some NCR, but not my favorite. It's okay to buy a little bit at these levels. On the other hand, we got Blackberry here. Blackberry is one of the favorite meme stocks. I think they're pivoting into security type area. As you can see here, there is no sales growth. You're not buying Blackberry if you're a fundamental type investor. But if you're a trader looking for a small bounce here and there, then you can buy Blackberry. RSI is 40, tells you stock is oversold at this time. It's okay to buy. As you see here, stock has been doing not so great in 1 day, 1 week, all the way to 1 month, and even 6 months they've done negative. So if you want to trade in and out, Blackberry is a good one to buy at these levels, slowly accumulate, and when it bounces back, you could sell Blackberry. And then you got a couple more here. Shift4. Shift4 is a fintech play. After the quarterly earnings, stock has dropped down drastically. I love Shift4. They are doing great. They started with the hospitality and the hotels type business, helping them with the payments. $82 stock. As you can see, a nice sales growth and nice gross margin. So handily beats rule of 40. RSI is 38, tells you stock is oversold at these levels. They got a little higher debt on the balance sheet. Stock has not done great in 1 day, 1 week, 2 week, and 1 month, and they've done good for 1 year. So stocks like Shift4, I would take advantage of this pullback here and buy some Shift4 at these levels and slowly add to the position. I love Shift4. I'm sure they will do well. And then we got here DOCN, Digital Ocean, $51 stock. As you scan through here, right now that we don't have any sales numbers yet. Nice gross margin, and they also have institution backing. RSI is 49, which tells you stock is oversold, and no debt or very low debt. That's why debt to equity ratio is 0. Stock has been dropping off in last 1 day, 1 week, all the way to 2 week. I would buy some Digital Ocean at these levels. I think stock will do well. And we got a couple more here. STEM, same story. STEM, there is no sales and sales growth. Sales is 0, as you can see here. RSI is 33, tells you stock is oversold, and performance perspective, they're not done great, but this is speculative play. If you want to buy this stock with the future promise, you could buy some STEM at these levels and take it from there. And as you scan through here, we got PagerDut here. This used to be a great stock when they IPO'd a while ago. Off late, stock has fallen off wayside a little bit. RSI is 45, nice sales growth. And I think, as you can see, a stock is sold off in the nearer term. I would buy some PagerDut at these levels. Stock typically sometimes goes up after the earnings. It's a good one. They're trying to simplify all the software, all the case management type areas. I think they will do well. And we got a couple more here. Anaplan was good a couple of weeks ago when the stock dropped after the earnings. Now they got their mojo back. But even up here, if you want to buy some Anaplan, ticker symbol plan, it's okay to buy a little bit cautiously and take it from there. And then you got a couple more here. Tenable, FireEye, SailPoin, all great stocks. As you can see here, RSI is well below 55, and stocks have been falling off of late. I would buy these stocks at these levels. One of the reasons they are coming down is because insiders are selling, as you can see here. But I think these are great stocks. They will do well. Nice sales growth and gross margin. And then as I scan through, I got one more here, E2open. It's again a software play. 51 is the RSI. Nice. I think there is nothing to show off from a sales growth perspective. It's a negative for 1 year. Gross margin is okay. You could buy some E2open at these levels. Stock is oversold and take it from there. Next, we got some more mid-cap stocks here. I will cover a few of them so that way you can look through here. We got Rackspac. Rackspac was an IPO a couple of years ago, and then they went into some private venture type, and now they became a public company again. $13 stock, as you can see here, and stock is okay from a sales growth perspective, not great. There is a good gross margin, beats rule of 40, as you can see here. Stock has been falling off of late, and as you can see here, RSI 13 tells you stock is completely oversold at these levels, and it's telling you, hey, you know what, I'm ready to turn around with a small one-day uptick here. So I would buy a little bit of rack space here with this pullback here. Also, given short ratio is 4%, it's not a great short ratio, but I would buy some rack space at these levels and take it from there. Next, we got Paysafe here. It's a $8 stock, as you can see here. And as you scan through here, RSI is 42. Stock is completely oversold, and stock has been selling off in 1 week all the way to 1 year. So Paysafe, as you know, it's a fintech play. I'm sure company will do well. Right now, they have nothing to show for. If you have some patience, stocks like Paysafe can do well. I think this is a good one, a long-term play. And then you got BigCommerce here. BigCommerce is supposed to be a competitor for stocks like companies like Etsy, Shopify, and even Amazon.com. As you can see here, they got nice sales growth from a 1 year perspective, nice gross margin. RSI is low, tells you stock is oversold, and stock has been dropping off of late. High short ratio, 12%. So this is a good recipe. If you can buy at these levels and hold for a while, you could see some short squeeze because of high short ratio here. And then we got here API Agora. It's a Chinese based play, something like a Chinese Tulio, $27 stock. With all the Chinese stocks getting hammered, this one also got hammered big time. I think if you have some patience, you can start picking up API slowly. There may be a little more downturn with the China cracking down on these internet stocks. But I like Agora. I'll be buying slowly, even though in the nearer term there is some pain involved holding the stock. And then we got here AYX Alteryx. Stock tumbled big time after the earnings, now showing some signs of progress in 1 day. RSI is 35, completely oversold. I would buy some Alteryx at these levels. And then I got my favorite Fastly here, $39 stock. Stock is completely oversold, as you can see here. Nice sales growth and gross margin. Handily beats rule of 40. Stock has been selling off of late. I would buy some Fastly at these levels. And then I got Luminar. It's a autonomous driving play. And C3 AI, Tom Siebel's company. They're into artificial intelligence, as you can see here. Stock is 46, completely oversold. Even though you don't see any sales growth numbers here, I would still buy these companies. They will do well in the long run. All right, now let's look at large cap stocks. Typically if you don't want to take too much risk with the small cap or even medium cap, then you could look at large cap. These large cap stocks have got market cap greater than $10 billion, as you can see here. I've highlighted few stocks for you to look at. For example, I got here CrowdStrike. CrowdStrike is a great company, cybersecurity company. And as you can see here, stock has been falling off of late. RSI is 42. I have not seen this company, RSI, at these levels. I think it's a great one. I would take advantage of this pullback here in a 1 day, 1 week, and even 2 week and 1 month, and buy some CrowdStrike quality stock at these levels. And then as you scan through here, we got a couple more. For example, Lyft is a great one. RSI is 46. It's a one of those ride share type stock. Don't expect too much, stock going up too much, but it's a good one to buy at this downturn here. And then I got Trade Desk. Trade Desk is a good one. I think stock has fallen off after the earnings. RSI is 51, still little higher, but I would buy a Trade Desk. Their business is great. They're doing good in the digital advertising type area, programmatic advertisement. I think they will do well. And as you scan through here, I got Shopify. Shopify has dropped off. RSI is 49. It's a good time to buy some Shopify at these levels. And last is PTC, $130 stock. It's also RSI is 40. Stock has been falling off. You could buy some PTC, fundamentally strong from a sales growth and gross margin perspective. Also positive net margin. And if you want to look at some of the other stocks, you could do that. There are many of my favorites here, like Square, Asana as an example, even Zscaler. I love stocks like ZI, Zoom Info, and some stock have been acquired. For example, Five9 was acquired by Zoom, as many of you might be knowing, and even Nuance. I think this might be acquired by Microsoft, so that's why I did not highlight. I like many of these companies. Only concern I have is a little bit higher from a RSI perspective, but stocks like even Bill.com here, 62 RSI, stock has been falling off. You could buy some Bill.com also at these levels. So with that, let's jump into a few more large cap stocks here. I like Docusign. Docusign is a great company. They help you, minimize physical presence when you sign some documents like mortgage or anything of the sort. RSI is 53 tells you it's okay to buy some Docusign at these levels. Stock has been falling off in 1 day, 1 week, and so on and so forth. And then I got Palo Alto Network, one of the great cyber security play. RSI is 41, tells you stock is oversold, and nice sales and sales growth. I would buy some some Palo Alto at these levels, given stock has been selling off of late. And I got here Zendesk. Zendesk also, after the earnings, stock has fallen down. RSI is 31. Stock is completely oversold. I would buy some Zendesk at these levels. And Uber, same story. I would buy some Uber. Don't expect hyper growth, but it can bounce off of these levels. And then I got Workday and Mcafee. Workday is a great enterprise software, as many of you know, helps with the human capital management. RSI is 54. I would buy some Workday at these levels. This company will do great. And then I got Mcafee.com. These guys are into consumer cyber security. I think it's a good one to play at this lower levels. RSI is 44. And if you're a speculative investor, you could also look at Robinhood. It's one of those favorite meme stocks, goes up and down. Right now, as you can see here, I'm trying to see very short interest. Short ratio is not much right now, but this is one of those meme stocks. Because stock has come down in 1 day, 1 week, you could buy slowly into Robinhood and take it from there. And as you scan through here, I got a couple more. Okta, I love Okta. Right now, RSI is 43. Stock is oversold. You could buy some Okta here. And also like Sentinel, it's into security. One of the reason, stock like CrowdStrike came down a little bit is we got Sentinel here, new kid in the block. And these guys are also doing well in the cyber security. I would buy some Sentinel at these levels and take it from there. And then I got here Fiserv, Akamai, and Lidios. Especially Akamai and Lidios, I think the stock dropped after the earnings. Lidios, came back pretty quickly. I would buy Akamai, Lidios, and even Fiserv at these levels. Great stocks, and take it from there. So we got one more sheet with the large cap stocks here. As you can see, I have highlighted here Stone Co and Checkpoint with the RSI 34 and 52. Nice sales growth and gross margin here out by these companies. And also, as you can see, I got Fidelity, UiPath, one of my favorites here. I think this company will do well. Right now, completely oversold. And Godaddy, same story, great company, oversold. And CLVT, Cooper, VIX also got stock dropped after the earnings. And we got DD. Again, to buy DD, you got to be a little bit contrarian here. Chinese crackdown still in progress, but you could buy some DD on a down day and hold it for a while. And then you got Affirm here, buy now, pay later type fintech play. Stock has been dropping off. I'm sure this company will do well. I will buy this company into any weakness and accumulate slowly. So with that, that's the wrap. Now we'll look at some of these stock charts and see what we can make out. So first I got here GreenBox. GreenBox is a crypto play, as you know. As you see here, nice looking chart here. Stock has gone up nicely, hit the top at $20, came back down to earth, hit the 200-day moving average, bounced off of 200-day moving average, went up. Now they broke down below 200-day moving average, as you can see here. So that's a small uptick. I think this stock will slowly use 200-day moving average as a resistance to begin with. Then it will use it as a support. I would buy some green box at these levels slowly. I'm sure it's a little risky play. It's not for folks who are fundamentally inclined. But if you want to be a little bit contrarian and do a little bit speculative type play, you can buy some green box at these levels. I'm sure company will bounce back as you go forward. Little high risk, high reward type play here. And then you got grid here, GDYN. As you can see, a nice looking chart. Stock has been going nicely. RSI 61, little high, but still you could take advantage of down days on this stock and buy some. Nice looking chart here. As you can see, a 200-day, 100-day, 50-day, and 25-day moving average. All are pretty nicely spaced here. That shows you stock is in a bullish territory right now, trending up nicely. So as it looks like this stock hops into goes up, comes down to 25-day moving average, sometimes into 50 and 100. So you can buy this stock when they come to maybe 50-day moving average and then take it from there. And then you got EB here. As you can see here, stock has been dropping off of late. RSI is 41, tells you stock is completely oversold at these levels. You could buy some EB at these levels. It's trying to use 200-day moving average as a resistance point here. I'm sure it will go above that as we go forward. So because stock is oversold, pretty okay from a fundamental perspective. You can buy some EB at these levels. And then you got Zuora here. Zuora, as you can see here, many times stock is trying to bounce off of 200-day moving average, go up, trying to hit the 100-day moving average, go up. So right now they're trying to bounce off of 200-day moving average. As you can see here, RSI is 36. VWAP is around current price. That tells you stock will stay there, maybe in the nearer term. Earnings is coming up on 8/25 in a couple of days. So I would buy some Zuora at these levels. Typically if the stock is down before the earnings, as you can see here, it will go up after the earnings. Same pattern here. So I would think this will have a bounce back after the earnings. And now we look at CrowdStrike here. I like CrowdStrike. Great company. As you see here, nice looking chart. Stock kind of goes up and down nicely. Tries to bounce off of its 200-day moving average and sometimes 100-day moving average, which is this yellow line. Right now, it's trying to bounce off of a 100-day moving average here. RSI is 37, tells you stock is completely oversold. I would buy some CrowdStrike at these levels here. And if you don't want to buy stock outright, because it's a little higher price stock. You can buy even options given IV percentile is low volatility. You're not paying too much money for options. And then you got apps here, Digital Turbine, one of my favorite stocks. Stock has been dropping off big time, even below 200-day moving average, showing no signs of stabilization at these levels. But I take advantage of these steep drops like this. For example, steep drop came up, steep drop came up. Right now they came below the 200-day moving average. I would slowly buy and accumulate Digital Turbine. This company will do well in the long term. I think they also had their earnings a while ago. Next, we got NCR here. NCR, as you can see here, has done nicely in the past. Right now, they are trying to, they're going a little bit below their 100-day moving average, as you can see here. I could see, stock maybe coming down a little bit, maybe around 39 levels, and then bounce off nicely. So this will typically uses its either 100-day moving average or 200-day moving average as a support level. And then we got here Shift4, one of my favorite fintech play. Stock has been doing nicely in the past, ups and downs, ups and downs. Now after the quarterly earnings, stock has come down, trying to use 200-day moving average as a support point. I'm a buyer of Shift4 at these levels. So we got one more chart here, ZI. It's a Zoom info. Anytime you want to sell something to your customers, you want to know who is the decision maker. Zoom info will tell you a directory information, who is the big boss or a decision maker. So that way you can approach them and make the sale. Nice company. I like this company. I think stock has done nicely over the past. Right now, after the earnings, I think stock had dropped off a little bit. Typically, this stock bounces, around 25 or 50 or even 100 day at times. I would buy some of these stocks on this downturn. Right now, RSI is 54, a little high, so that's why you can wait for stock to cool off a little bit. Maybe buy when it touches 25-day moving average or even 50-day moving average. And then you got PTC here. PTC, as you can see, a nice looking chart here. Right now they're trying to use this 200-day moving average as a bouncing pad here. I would buy some PTC at these levels and take it from there. And we got here DigitalOcean, DOCN. Nice looking chart. I love this chart here. They're trying to bounce off of their 50-day moving average, as you can see here. I would buy this stock at these levels and take it from there. IV percentile a little high, as you can see, as 74. So if you are a put option seller or a premium seller, you could sell some put options for nice money given IV percentile is high. And then you got Palo Alto Network here. It's a great stock. Looks like their earnings is coming up in 5 days or so. Anytime stock falls before the earnings, you could buy some, you could see and bounce back. Sometimes you might have to wait, like here, you have to wait a little more. But I think right now they will do well. This is the COVID-19 times. Oh, it's after COVID-19, but typically at these levels, right now it's trying to bounce off of its 100-day moving average. I would buy some Palo Alto slowly, and if it falls further after the earnings, I would buy some more. Fundamentally strong company. So we got few more here. We got Fidelity here, one of the great financials type play here. As you can see, a stock has fallen down, went up, came all the way down, went up. Now it's kind of came down after the its earnings is 18 days. I would buy the stock at these levels and take it from there. I think they had the earnings already. I think after the earnings, stock had dropped big time. Now trying to bounce back. I would buy some Fidelity at these levels and take it from there. And then you got your UiPath, one of my favorite stocks. Kathy Wood has bought tons of this stock. I think stock has not done great. It's below its moving averages at this time. I would buy some UiPath at this level. Be a contrarian, buy some UiPath. This company will do well in the long run. We got GoDaddy here. Godaddy is one of my favorite stock. As you can see here, good for trading, not for long-term investing. Stock comes down, bounces back, comes down, bounces back. This could be a short squeeze type situation. Right now they're below their 200-day moving average. I'm going to accumulate slowly at these levels, and I'm sure this will give a bounce back. If the history will, it will repeat, not exactly, but I'm sure it will have a nice bounce back. And then you got Affirm here, buy now, pay later type play here. They're taking some heat because companies like Apple, they want to go into this buy now, pay later type fintech play. Stock has been trying to see if it can bounce off of its 25-day and 50-day moving average. Out by some Affirm at these levels. I'm sure this will do well. So with that, thank you very much. Happy investing and trading. Please subscribe.